Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, everybody, and welcome to today's conversation. We are very lucky to have with us today Mike Milotich, who is the Chief Executive Officer at Marqeta. Marqeta is one of the original payment infrastructure companies and has been a fantastic success. So I'm really excited to dig into its story as well as learn more from Mike about his own career. With that, welcome to the conversation.
Thanks so much for having me. Good morning.
I want to start a little bit back in time, focused on you. And I've noticed in your career that we have a little bit of overlap, that you were at Barclays Global Investors in the early part of your finance career. When I was at Lehman Brothers and we had been bought by Barclays, I remember that Barclays had sold BGI in order to buy Lehman Brothers, which I think is probably one of the historically worst corporate transactions you could do. But it's a fantastic business, and now it is, a huge ETF business and iShares, I believe. How do you remember your early career? What brought you to finance? What got you interested in finance? And maybe just pull on some of those early threads.
I got started in finance mostly because I was quantitative in my orientation. So I'm more of a math brain, if you will, and, always was, going through my school years. And then I've always been inherently curious and analytical. So I've always just noticed things and sort of thought like, how does that work? Or, wanting to explore more. And I feel like a lot of components of finance that are more analytical, a lot of it is like peeling an onion and problem solving. And that's just always something that I was interested in. And so you can combine that with my sort of more data orientation.
What is inside this onion, and where do you use the onion? What do you season with it?
How I apply that is the more like particularly in the payments business, as an example, there are a lot of subtleties and nuances that matter. And so the more you understand, the more you can connect the dots to add value. So by peeling the onion and really getting down to really understanding how certain things work or certain interactions happen, the more you can apply that knowledge in ways that are advantageous, both from a career perspective, but of course, always about adding value for the company and helping the company be more successful. That's what helps your career. And so that's how it's really served me well, is that ability to connect the dots and then apply that to add value.
You did finance inside of financial services companies, right?
Correct. So I worked, I would say the better part of my career, American Express, PayPal, and Visa before I came to Marqeta. So I've also been in payments a long time, but yes, all sort of financial services related.
What kind of things did you get exposed to and did you see from that period, like the 2007 through that decade, starting with the great financial crisis, is really fascinating in terms of uncorking, the business models of whether it's asset managers or whether it is payments companies. From the seat that you had early on, like still with that fresh view, what did you notice? What did you see?
I wish I could tell you that then I could really see how the whole financial services space was going to really modernize and get very innovative. I did not have that foresight. I targeted American Express as a place to work because I had understood from many people that it was just a great company. And I was fortunate in that sense that I sort of fell into it and then really embraced it, really liked it. I think what I think has served financial services very well is that it has always been very data driven. So inherently there's a more data in that business. And so data driven decision making and data-driven risk management, for example, has been around for decades, long before you had the kind of technology tools and capabilities that you have today. So I would say the raw ingredients were always there. And I think as you started to see technology, come about, like, for example, my first job at Visa in 2011 when I joined was they had just created a mobile payments division. And, at that time, the smartphone was only a couple of years old, right? And so Visa recognized that mobile is going to be very impactful in payments, but what exactly that's going to look like is unknown, right? How it's going to evolve is unknown. And what's going to happen in the US is going to be different than what happens in Asia, which is also going to be different than what happens in Africa. And so, understanding that influence of how technology is going to impact the business, but having all this data and understanding about how to make better decisions and be smarter about some of the bets you're making as a business, I think is what makes financial services maybe more unique or ahead of its time. Right now, everything in digital advertising and marketplaces is also all about data and data mining. But I think financial services was probably, ahead in that regard, just because of the nature of how those business models work.
You brought up a really interesting example, so let me meditate on it for a moment. This sort of moment when proximity payments and mobile phones became a real way that commerce could happen. Visa played an enormous role in that, but within some of the developments from Apple Pay and Google Pay. And it reminds me a little bit of where we are, and I know this is sort of a side turn, but where we are with agentic commerce, where you have everybody's sort of like pregnant with the feeling that it's coming, but it probably felt a little bit like that mobile moment. Were there parallels? Like, how would you compare the two?
Yeah, I think what's similar is that when the technologists drive the conversation, they tend to get a little bit ahead of the narrative, gets ahead of the reality, right? Because what's possible with the technology is always very exciting. And I would say those two things are very similar in terms of the early days of mobile and the early days of agentic. So what's possible is very exciting. And the people who are driving the technology, I think, get ahead of again, some of the challenges and nuances of payments in terms of security, first and foremost. Like, how do you fraud is a huge issue and factor in everything related to payments. And it affects both the people who are trying to provide those payment options who take the liability, but also in terms of consumer behavior. Consumers tend to be slower to change their behavior than I think a lot of technology enthusiasts think, because it's money. People inherently are quite conservative. And so changing behavior takes a long time. So I would say security is something that has to be solved. And then there are other things that are just, again, practical things that non-payment people don't tend to think about. So like, as an example, I often use, like, between e-commerce and what's happening with agentic, is in the early days of e-commerce, a lot of retailers would talk about that they had to evolve to deal with the number of returns, right? When you were buying everything in the store, you tried it on, you saw it, you put it on, you looked in the mirror. And so the returns were relatively low. But in the early days of e-commerce, when you're buying everything online and you've never put it on, you've never seen what it looks like, there was an increase in the returns rate. And that was like an operational challenge that then the impact of what was happening in payments became an operational challenge in retail. And so there are just things like that have to be worked out. And that's why things don't happen with the snap of your fingers. It takes some time for not only people to work out the user experience and making it secure, but also some of the operational differences that have to be worked through, investments have to be made, problems have to be solved.
I think it's a blind spot for sure in the people who invest in categories and tell stories versus folks who actually have to make it happen. If we spend just a bit more time on your rise at Visa and the different parts of the business that you saw, I mean, Visa is a company that has stayed on top as a network of networks really successfully. And, that's a really difficult thing to do. What do you think allowed it to, persist in this way? And as you kind of got more and more visibility into the company's machinery, like what are some of the things you admire about it?
Two things in particular. So one is there are very few businesses that are as global as Visa in terms of, I think they operate in every country that isn't sanctioned by the US government. So they truly are, everywhere, I guess, as the tagline says. But yet payments inherently, and you know this, you're a student of the business, is local, right? So how things work on a local level is quite different as you move from country to country. And so being able to do both is really a unique skill set. So be global, but yet local at the same time. So what things have to be done consistently for the good of having a global platform, but what things need to be local to cater to the local habits, tastes, laws, regulations, etc. That's a challenging balancing act. And I think Visa and MasterCard both have perfected that, or honed that, maybe not perfected it, but honed it over decades, right? Of learning how to operate that way. And I think that was something that I took away and was very impressed with, the ability to balance both those things. The second one that I would point to is a really healthy paranoia, right? When you're the leader in the space, you have a great position, competitive position, you have a great business model, there are many, many examples in history of businesses that get complacent, right? And sort of rest on their laurels. And I would say one of the things I've always admired about Visa and when I was there is that there's a very healthy dose of paranoia and a pride in kind of continuing that legacy, carrying that torch, and not being the one who drops it, right? So that every day, that sort of willingness to grind and say, I'm going to keep working to stay on top, I think is something that I took away that makes the business one of the more special businesses out there.
Were there any organizational principles that you think allowed it to be global but local, or sort of traditional but nimble? People try matrix organizations, they try the pizza-sized team. I think right now the idea is let's have everything inside of an AI gigabrain and people are just nodes in the machine. Like, what was the organizing structure of the company that you think worked?
So the leadership, inherently the way the company is organized is regional. So that's what keeps them local, but it's still all the functional expertise is global. So they've struck the right balance of people on the ground who understand the local nuances, but then there are certain functions like the people running the network or, finance, risk, some of these other functions that are global in nature. So keep that, that you can't go too local. I think they do that well. I think what I saw as successful is they're good at incubating new ideas. So even as I'd referenced when I first joined in mobile, they recognized that at that time, they separated what they called an emerging products function away from the core product, away from the big machine of, credit, debit, and prepaid. We need to kind of carve this out so that it doesn't get kind of trampled or become an afterthought in comparison to the big business that's being run. And so I think that's what they do very well. And whether it was some of those early emerging products or now with, crypto and stablecoin and agentic, like all these things, when you look at how they organize in those areas, they try to create separate teams that can really focus and give them, visibility at the most senior levels, right? It really is carved out with a lot of visibility because otherwise it'll get trampled by the big machine that's being running of the day-to-day business.
Yeah, that makes perfect sense. Let's transition to Marqeta, which is sort of the spotlight of the conversation. Can you give us high level, what are the latest figures of the company, what's the scale of the company, and maybe just what are the chunky leverage points?
So in 2025, we processed just shy of 400 billion in payments volume. And so we're getting to be, pretty good size now. And that grew over 30% for the third straight year. So, and as you get bigger, right, it's hard to compound at that kind of rate as the base or the denominator keeps getting bigger. So that's something we're quite proud of, is that ability to scale and get to that level. And what makes us unique is that we service a lot of different use cases. So a lot of the, more modern players like ourselves tend to be more narrow in their focus. So they only tend to do like one type of use case, for example. And what makes Marqeta unique and has allowed us to grow at that rate is that we support many use cases, whether it's, neobanking, buy now, pay later, expense management, on-demand delivery, but we do credit and debit, we do consumer and commercial, and we do it in over 40 countries. And I'm sure one of the trends we're going to talk about at some point is how more and more people are going a multinational, where, card issuing tended to be very local and individualized in the past. I think that's changing with some of the developments in the market and some of the types of innovators and disruptors that we power. But that's kind of gives you a sense of the unique scale of the business and the way it's growing.
When was the company founded? And if you think about its history, were there a couple of turning points that really got you here? And I know you kind of stepped into the leadership roles recently, but I'm sure there's a sort of a myth of things that turned on, whether it's, the Square relationship or Klarna. How does that internal myth come together?
So I would say, technically the company was founded about 15 years ago, but I would say it was more like 10 years ago, the 2015, 2016 time when it started to become a real business. And the real innovation that I feel that Marqeta brought is, in the past, like before Marqeta, if you wanted to do something in card issuing, the bank controlled every aspect of that card program. If you think about some of the largest co-brand cards that you use today, probably, that are maybe, affiliated with premier technology companies or major airlines or hotels, but, you still manage those cards through the bank's app, as an example. Like that to me gives you a little insight into the history of what was possible. It had to be done that way in the past. And what Marqeta came along and said is, there should really be a better division of labor here, because, let's just be honest, banks, because of the regulatory nature and the safeguarding priority that they have, they tend to not be super innovative. They tend to not be very focused on user experience and product. Like those are not their strengths. And so why are we having them control those things? And so what Marqeta did was really say, let's have the bank focus on what they're good at, which is the safeguarding of funds, making sure you're compliant with, laws and regulations. And let's leave the user experience and the value proposition up to the brand, the company that really is going to touch the user and allow them to embed it in their experience, and have the bank be a little bit more in the background, playing a very important role, but a little less visible to the end user. And then in the middle, what we can do as Marqeta is provide the technology and the expertise and the scale to help our customers. So by us providing the processor and program management role, we can allow our customers, for example, to use different banks for different products, because each bank might only be comfortable with certain types of businesses. So we can help our customers roll out multiple product types across different banks, but we can obscure a lot of that complexity because they're only dealing with the Marqeta platform and they don't see sort of what we're doing behind the scenes to provide all that variety to them. And so I think that's what really separated Marqeta. And so it was in that, 2016, 2017, 2018, that's when, fintech really started getting momentum. And some of these companies that are now household names were really starting to, figure out and hone their value propositions and start to get traction. And so, and then it was, of course, the pandemic that I would say really, poured gasoline on everything. In terms of, if you look at the major use cases we support, on-demand delivery, Instacart, DoorDash, Uber Eats, all those businesses exploded with the boom of e-commerce during the pandemic. Buy now, pay later became, went mainstream. In expense management, everyone has been talking about for a long time about how to take cash and check out of B2B payments. It became more of a priority and just a matter of survival in the pandemic. And that really provided a catalyst in that space. And then finally, neobanking, right? Really having an embedded banking experience, either in a platform that you use for other reasons, or just a very unique way of engaging you. That became much more valuable once everybody was, at home and on computers and devices more frequently. And so that was really the catalyst that really changed the trajectory of the company and our partners. And then what's happened the last couple of years is, as the fintech boom has, sort of calmed, the winners have been crowned, is always the way I say it. There used to be 10, 15 companies chasing the same thing. Now there's been a little bit of a shakeout, and it's clear who the winners are in this space, and they're becoming big businesses. And as they become big businesses and there aren't 15 people chasing the same thing, they are spreading their wings, moving into new products, new geographies. And the Marqeta platform really makes that fairly seamless for them. And so that's really what has, the last couple of years, fueled our growth, is that expansion of those, what used to be, kind of fintech disruptors into, very big companies.
I think there is a through line to something we talked about before, which is your experience seeing mobile become a new channel and kind of Visa positioning ahead of it. And then the agentic commerce wave, where like the demand's not there, but it's time to plant a flag in the ground and position ahead of it. To me, it seems Marqeta did a really similar thing, because it was an embedded finance company before there was embedded finance as like this category, right? Where instead of selling financial products to consumers or to like a partnership manager that would sign a legal contract with you, you're effectively selling to developers and people who are focused on building software. And obviously Stripe's been a huge success in that on a very particular use case. But then there are companies in different verticals, whether it's, renting a bank or card issuance or capital markets and so on and so forth, where selling and embedding your fintech services or your financial services with a sort of like regulated chassis is the whole game. And, to me, it's sort of, there's a big symmetry to Marqeta's experience. I looked at it in detail quite a few years ago. And the thing that really struck me about the company is, as you said, it was founded pretty early on. And the product had been live for 3 years until Cash App and DoorDash launched. Like Cash App and DoorDash launched in 2013. And these are huge drivers of the business. I imagine just like the stress of sitting there for 3 years, having this feeling of like, we have it totally right. Like the wave is coming. There's no demand of any kind, and doing that for 3 years and having the conviction to get to the other side of that. And then your clients just like materialize, right? To me, that's such a powerful entrepreneurial story.
That's right. We really armed, I really think, it's a little bit of a cliche analogy in business, but I really think the way our business works is we really provided the Lego blocks for, innovative companies in payments to build their own service and their own offering. And that just wasn't possible before. Again, the bank kind of controlled everything and you had to go through them. And so once you you give these, brilliant and creative people, the Lego blocks and you set them free, they're going to build some pretty incredible things. And again, consumer behavior and payments takes some time. So you don't just launch something and everyone flocks. Like it usually doesn't work that way, because you've got to change their behavior. But more and more people started seeing the value, right? And they were delivering the value. And then you start getting more and more momentum and good things start to happen, and they start to evolve, right? I think if you look at like buy now, pay later, for example, is one of our fastest growing use cases. It's a good sized business for us, and it's growing incredibly fast. The last couple of quarters have all been over 50% growth on a year over year basis. And the transformation that's happening there is quite interesting, where the original problem we helped solve for the buy now, pay later companies was merchant scale, right? Rolling out a product that's more merchant facing, because you needed to click on the button on the checkout page. There are tens and tens of millions of merchants, and that's a very challenging endeavor to get the footprint you need. And we solved that problem with virtual card and essentially eliminated that need for all those merchants to do, technology integrations, but still allow them to accept this new form of payment. And so that helped the buy now, pay later companies scale. But then the last couple of years, they've been shifting to be more of a consumer value proposition. So in those early days, it was all about getting their mark on the website, right? And the merchant was pulling their business through. The emerging trend that's now happening is more and more, they're issuing the consumer the card and saying a feature of the card is to be able to buy now, pay later. And that card can be used anywhere that cards are accepted. So I don't have a merchant acceptance problem now. I can just engage the consumer to deliver my value proposition. And so, those are also the things that have happened during this time is these businesses are also evolving, as times change and they get bigger and they become, again, more trusted and have more brand recognition. Their business models are evolving, and we, do our best to make sure we're on the forefront of that, and we enable them to make those evolutions and have that flexibility.
So let's transition to today. I'm really interested at maybe a somewhat prickly topic, public versus private markets. Like, as you said, Marqeta is one of the largest winners in this space, and it's now a public company. It is generating more volume than, ever before, and has more business lines and kind of commercial traction than ever before. And yet I think it's so much harder to be a public company than a private one, because in the private world, you're only valued based on sort of a conversation with venture investors. You might get 20 to 50 times revenue as your valuation. The story is kind of enough to get you through, and people are just chasing growth. And then you get to the public markets, and I think a lot of the public markets are just bigger. And so no matter how much venture backing you have and how many growth investors are behind you, you are going to run into people who are just like, I'm a bank's investor and this is a bank and I only look at this company through a spreadsheet, and they don't maybe appreciate the color and the richness of the struggle and the story. What has been the experience within the company for like adjusting to that reality? Is there an operational reflection in terms of what the company can do, in terms of how it makes its choices, and especially given your experience in investor relations and corporate finance and kind of like that core skill set of communicating with the public equity world? What is it like for a really hot fintech unicorn to jump into the sobering pool of the public markets?
It's an experience, right? The analogy I often use, we were relatively young as a company when we went public. And so the analogy I often use is that we're a child star. We've been growing up in the public eye. And I think it's a good analogy because you have to adjust your behavior in terms of, how you communicate and how clearly you do that and how you do it on a consistent and regular basis, as opposed to when you're private, there'll be certain points or junctures or certain meetings where you have to be very articulate and communicate your case well, but those are more infrequent versus once you become public, it's an everyday, you're being evaluated and measured on a day-to-day basis. And so the clarity with which you communicate and the consistency with which you do it becomes very, very important. Once you embrace it, I guess it makes you stronger, right? So the key is to, and I think something that we've done well the last couple of years is to, rather than, sort of say, woe is me, it's so hard. It's more like that scrutiny and that competition, because essentially the market is, it's supply and demand. So there's only so many investment dollars out there. You're competing for them. That really makes you stronger and makes you better if you embrace it. It's a challenge. And I think that's what we've done well, particularly because we really view that we have the ingredients to be a very big business. And so if we execute well, and so sort of accepting and embracing that challenge, I think does make you better and helps you maybe prioritize and not, one of the things I saw, for example, when I first joined that were more from our, private, more startup roots is trying to chase like 7 things at one time. For example, that can be very challenging. You spread yourself thin. You tend to waste a lot of investment dollars, and it's very hard to execute. Versus now, I would say we try to do 3 things at a time, and you have a list of, okay, once that one of those is done, you've got the next one up, right? That you slot in and allow you to focus and execute a lot better. I also think that it's served us well with customers because they can see exactly the health of the business. So we can't hide in terms of where we are financially, what we're up to. Every quarter we have to talk about what's happening in the business and where we are and things we're focused on. And I think for the most part, that helps us with our customers and our prospects because it's very visible, what we're up to as a company and the strength of the business versus many of our competitors are either private or a small piece of a much larger public machine. So there's not a lot of visibility into what's happening and how well they're performing. And so we've tried to embrace these things and turn it into a strength rather than, feeling sorry for ourselves, if you will, as the market fluctuates as it has, particularly in fintech over the last few years.
Does it change how you think about risk for the company? You mentioned sort of finding focus and being more transparent, but in terms of, going back to that question of a successful organizational structure and how much responsibility you give to individual product leads or, how you do budget allocations, has the discipline of being public changed that operating texture of the company?
A little bit. I would say it's all about calculated risk, right? I think you can be a little bit, if you're private, no one's going to know if you try something and it really doesn't work. And so there's something freeing about that. But I would say, but that also can, it leads to more variability. Like, sure, you can have home runs, but you also have a lot of strikeouts, right? Because you didn't necessarily do as much work and sort of pre-planning and thoughtfulness before you just started running. So there's good and bad. But I would say, we still do a lot of innovative things. We're always looking to push boundaries, both things we think of or things that, customers or prospects may bring to us and we work on together. And I think it really just comes down to calculated risk. How do you really think through the things you've got to watch out for and what are the gating mechanisms? So what's the progress? What are the milestones I'm going to be looking for to make sure we're on the right track and this is leading to something, as opposed to this is really just a science project that, isn't gonna get traction or lead to something that really helps our customers grow their businesses. Because ultimately we're an enabler and that's what we're looking to do. So I think it just gets you a little bit more disciplined in terms of let's really think through this and let's consistently evaluate the progress we're making and just be honest about it. And that's worked well for us, where we can strike that balance between improving, our profitability, because that's the one thing when we went public, and that was fine at that time that, we didn't make money but we were, driving growth and causing disruption. And that was enough for shareholders, but that has changed. And so, over time, as we've gotten more and more scale, we get the benefits of that scale, and that shows up in the bottom line. But also the discipline with which we're operating means that if we pursue fewer things, but they become higher probability successes, we actually are better off, not just on the top line of the business, but also how much of that trickles down to the bottom line in terms of profitability.
I spent a bit of time in equity research, so I apologize on the behalf of all analysts out there who think that they can manage a company better through spreadsheet assumptions than by actually running it. If we fast forward, and this is obviously like a imagination exercise, not anything specific, but you mentioned that there's a huge opportunity for the business in the future. And, that's demonstrably true. There's several large payment networks that are each worth about $500 billion. They're payment processing companies that are in the hundreds of billions. At a moment of time when Marqeta is a $100 billion company, what does the world look like? Like, what are the things in the environment that have changed that you think get the company there?
There's a few, and I would say the seeds are already planted and being nurtured right now. So there's a few things happening that I would say. So one is, if I were to, summarize it, it's non-banks providing financial services. And you said it earlier, embedded finance. Like, we're still in the early days of that. And what we see happening is fintech showed what was possible, right? So that was the definition of fintech, and they showed what was possible. But a lot of the challenge that fintechs ran into is they had to build their business from scratch, and the cost of acquisition to build their business became unwieldy. But what's happening now is big companies that already have platforms that have tens of millions of users are saying, well, I could inject a financial product like I saw fintechs do and really drive engagement and loyalty. And so that's one of the next waves. And a lot of our more legacy competitors, we have a diverse set of competitors, but the ones that are the biggest and have been around the longest, their platforms are really set up to serve banks. And so there's a real opportunity to serve this emerging business that's being driven by non-financial service companies. The second thing I would say is, as those non-financial service companies, move into this space, they're global already, almost by nature. So if you think about the way banks work, banks are really local. Like, there are some multinational banks, but they're more multinational on the commercial side in terms of treasury management and things like that. There's only a handful that are truly multinational on the consumer side, but most businesses, whether they're large retailers or they're tech platforms, are global. And so that ability to have one platform that can serve them across many different geographies and do that in a relatively seamless way is a big opportunity. And you see some of the neobanks, I would say, are probably the furthest along in terms of being multinational, right? When you look at, Revolut or Nubank, some of these, businesses, they're going more multinational. The other thing that I think will drive a lot of success for us is, as these fintechs and embedded finance companies keep having success, they're putting more and more pressure on the establishment, which is the banks, who, still control the bulk of this business and have, owned it since the beginning. There is more and more momentum for them to modernize. So, because they have to compete. And so what I think is the exciting opportunity for Marqeta is that up until this point, we have mostly grown the pie. So we've mostly served use cases that maybe weren't on a card before, or servicing a customer base that, couldn't get kind of mainstream financial products. But I believe we're on the verge of entering the era where there's a modernization that comes to the industry, where we start displacing volume that is on platforms that are less capable and don't have the flexibility and capabilities that R provides. So that's what we're working towards. And there's a number of ways we'll do that in terms of different product categories. But if I were to think forward in terms of what makes us a much bigger business, that's what it is. Like an example, I'll just give you one example and then I'm sure you'll have other things you want to ask me, but personalization hasn't really come to the card business and maybe most of financial services, versus with everything being so much more digital now, almost many other aspects of your day-to-day interactions outside of payments are personalized, but that hasn't come yet to payments. And we believe it is coming, and it requires, though, real-time data and being able to analyze things in real time and respond. And so you need modern technology to do this. But this would come in the form of rewards that are customized to you versus me. We might have the same card, but the way we get rewards on that card is different based on what's valuable to us. And that's a trend that like we believe is going to come to the card business. But it requires really modern technology to make that happen. And so those are the kinds of things that, we can enable and can help us, fuel growth and become a much bigger company, 5 years from now.
Last question to close us out. So in that world, you're a $100 billion company. You've got all these things going on. If you look at your volume, will more of it come from humans or from robots?
I think that
you can use the word robots, pretty liberally. Algorithms, programmable money, software, right? But are we in a world where using a card, even if it's a virtual card on a mobile phone, is sort of the equivalent of sending a letter by post? If you fast forward to this future where you're at the scale that we're talking about, everything you could do for humans has been done. And you look at your volume, is it going to be still people, or is it going to be this machine economy?
Obviously, I don't have a crystal ball, but what limited I have maybe only goes out, say, 10 years. I think more of it is still controlled by humans. I think there are things that no doubt agentic is gonna help people do, and it's still going to be human controlled, but it might just be that you talk to it or it prompts you, right? You're still going to make the decision, right? But it might prompt you, hey, you're getting low on this. Should I get more? And you say yes, right? So I guess it depends on how you define it. So I think we'll still have a lot of human-based decision-making just because it's money. And it's hard for people to completely relinquish control of how they use and spend their money. I just think that's going to take a long time to get people comfortable with that. But will a lot of robots, to use your word, sort of be guiding you through that and prompting you? I do think that, 5-10 years from now, there'll be a lot more of that. That'll make it a lot easier for you to make those decisions, as opposed to now you have to do some work to make that happen.
Despite your experience as a financial professional in financial services, I think you're still a romantic and believe in the human spirit, which is nice to see. If our listeners want to learn more about you or about Marqeta, where should they go?
The easiest place is to go, well, certainly about Marqeta would be to go to marqeta.com, and also podcasts like yourself and other, fintech industry publications. That's where, we do power many of the fintech winners and disruptors. So that's a great place to look. And I'm probably less interesting. So, I'll leave it at that.
Fantastic. Thanks so much for joining us today.
Thank you for having me.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.